I've got 4 listings right now, and do you know how many showings that I've had in the past 2 weeks? 0. I've got buyers who were ready to pull the trigger 6 months ago, and now they're telling me, you know what, I think we're just going to rent for a year. And I've got sellers who still can't wrap their heads around selling their home when you've got prices that they were seeing in 2021, and now they're looking at their home value in 2025 and they're shaking their head. This market, it's not frozen. It's actually breaking down right now. And in this video, we're going to show you exactly what's happening in Toronto real estate market right now, what the data is actually saying, and what I'm seeing as a full-time real estate agent in the GTA, and where I believe the market is actually heading next. If you think the crash is over, stay tuned throughout the rest of this video, and we're going to take a second look at that. Now, as of April 2025, the Greater Toronto Area average home selling price was $1,107,000, marking a 4.2% decrease compared to April of last year. Breaking down property types of detached home, that average went from 1.4 down 5.6%. Semi-detached, their average price is now down to $1,088,000, which is a 4.5% decline. Townhouses, they're down to $1,005,000. That's a decrease of 3.8%. Condo apartments, the average price is now down to $678,000. That's down 6.9% from the previous year. Now, these figures, they indicate that the market is still adjusting, with pricing continuing year after year and month after month to decrease right now across all different property types. Now, to understand what we're actually dealing with in the current downturn, we actually need to compare these to the peak 2021-2022 numbers. November 2021, the average home price in the GTA was $1,063,000. The home price currently is $1,107,000, represents a 5% decrease here from the peak. Now, that might not sound like a big number. It might seem fairly modest to you. It's important to note that there's certain other areas out there that are taking much larger hits, as we've seen in some of our other videos, especially when you start to consider things like inflation and the other economic factors that are out there. Historically, the real estate market experiences cycles of growth and correction. For instance, during 2017 downturn, the GTA saw price decreases up to 20%. Now, comparing that to the current market today, certain regions, particularly the suburbs, of course, are experiencing similar and even greater declines in some cases. This suggests that we may still be in the midst of the actual correction phase. The broader economic landscape right now also plays a pretty big role of this whole thing. GDP growth, Canada's economy, is at 2.2% in Q1 of 2025, surpassing expectations, of course. And the Bank of Canada, we're still currently sitting at 2.75, and the next rate announcement is on the 4th of June. I don't think it matters what they give us. I think the market is still going to continue to go down, whether we get a 0.25 or a 0.5% reduction. You're going to see it from all the agents out there, a big reduction of 0.5%, and the market's going to start moving up all of a sudden. That's just not how things work. Everything is costing more money in today's life. We are just going to be taking that extra savings and putting it in our pockets for anybody who's actually on a variable rate mortgage. Buyer sentiment right now is shifted notably. Now, with the prices declining and the economy being super uncertain right now, many potential buyers, they're actually adopting that, hey, wait and see approach. This cautious behavior contributes to the reduced demand, further impacting the home prices. It's a self-reinforcing cycle where the declining prices lead to decreased buyer confidence, which in turn leads to further price drops. And it doesn't make a whole lot of sense for you because you saw the market going crazy and everybody wanted to buy a house. Now you see the market coming down and nobody wants to buy a house. That's just generally the way things go. Now, you can't time the market. You might get lucky, but attempting to time the market, it's challenging at best. Historical data shows that waiting for the absolute bottom of our markets often results in you missing an opportunity, maybe catching it on the upswing or catching it on the downswing. Instead, you need to actually focus on identifying specific properties that are out there that meet your needs, that are priced reasonably with current market context for today. Engaging with a knowledgeable real estate professional, of course, we can guide you and navigate you whether the deal makes sense, whether you should continue waiting, depending on the type of property you're looking for. If you're looking to buy a condo and you want to be in there for the next 3 years, I'm probably telling you today, maybe just rent. But you're not going to get that same advice from everybody out there. The Toronto real estate market is in a state of flux. The prices are adjusting. Economic factors are influencing all the buyer behavior out there. Now, for buyers, you need to still assess your financial readiness, because if that opportunity pops up, you need to be able to act quick and go for that property. You want to have your pre-approval, you want to have your numbers ready to go, so that way if you want to get into the market, you can. Now for sellers, you have to be extremely realistic about pricing and the market conditions and knowing your area. If there's 10 other properties on the market, you have to be the best priced unless you're super unique. Otherwise, you're gonna have a difficult time selling your home. Best price, best terms, best property, best presentation is going to win in today's market. Now, we wanna zoom out here for a second. Every major correction, it has a cycle. You have euphoria, you have the plateau, you have the decline. From there, we head to capitulation and recovery. So where are we in this actual cycle right now? I think we're actually in that decline phase. The buyer activity is hesitant. Prices are quietly sliding right now, and sellers, they're adjusting slowly. And media coverage is still mixed. You have half the media saying market is great, half the media saying the market is not great. And this might be very confusing to you if you're trying to figure out what is going on. But what we're gonna see, especially with renewals hitting in late 2025 and 2026 for people on their mortgages, we are going to see further correction unless the rates come down significantly. And that's likely when we are going to see the bottom of this market, if I am to put my best guess on it. Now, it's important you understand, I'm just making an educated guess here. No one can call the bottom specifically. That's just my educated guess on where that bottom will actually be. If you're trying to time the exact bottom, of course, it's a fantasy. At the end of the day, we've already talked about that. Even in 2008, 2017, the buyers realized that it hit the bottom after they'd already seen it and it had gone. So smart buyers, what they actually do is they look for value in the down market. Whether you're an investor, end user, somebody who's just looking for a home for their family, use strong fundamentals, whether it's rental fundamentals or end user potential. You don't want to just wait. You want to negotiate right now when people are fearful selling their homes. You want to lock it in, take advantage of people's fear, because the wealth is built when others are scared. This market is correcting. It's not over yet, I don't think, but if you're watching carefully, you're in the best position to actually make a smart move. If you want help figuring that out, you can always message me at the number here on screen, or click the pinned comment in the description box down below to connect us, and we can chat about what makes sense for you. And if you're curious about what's happening in the GTA or GTHA real estate market, we've got one right here where there is possibly fraud happening, but also some big, massive losses that sellers have had to take as we take our ride in the decline phase of this real estate cycle.